Whenever the market stumbles, the AI skeptics crawl out of the woodwork, ready to declare the so-called AI bubble has finally burst. We saw it in April 2025, right after Tariff Liberation Day, when US trade tensions rattled tech stocks. And now, as new tariff pause deadlines approach and more levies are on the table, the market is showing signs of nervousness once again. Predictably, the doomsayers are back. But just like before, they could be proven dead wrong. Because behind the headlines, the reality is this: the world's biggest tech empires are not retreating, they're doubling down. At the Reuters NEXT Asia summit, Google's AI policy head, Eunice Huang, said it plainly. In the early days of a transformative technology, the risks of underinvesting far outweigh the risks of overinvesting. That's not speculation, that's strategic conviction. And Google's actions back it up. CEO Sundar Pichai just reaffirmed the company's commitment to a massive infrastructure push, one that includes rolling out a global private network, launching next-gen cloud tools, and powering AI compute at unprecedented scale. This isn't hype, it's the beginning of a multi-decade platform shift. To borrow from Warren Buffett, be fearful when others are greedy, and greedy when others are fearful. Right now, fear is back in the market, and that creates opportunity. In this video, we'll break down 3 powerhouse stocks that are not just surviving this macro storm, they're poised to lead the AI infrastructure wave. If you're an active investor looking beyond the noise, this is where the real growth is being built. First on the list is Nvidia Corporation, ticker symbol NVDA, a name that's become synonymous with artificial intelligence itself. While some critics say the AI boom is overhyped, Nvidia continues to defy gravity with real-world execution, expanding both its reach and its dominance. What makes Nvidia so compelling right now isn't just its powerful GPUs or soaring sales, it's the fact that the company is building out an entire AI ecosystem that stretches from cloud infrastructure to industrial automation, and even into the robotics revolution. Nvidia's recent moves in Europe tell the story. The company isn't just selling chips, it's embedding itself in the foundation of future AI infrastructure. Through strategic partnerships with local telcos, cloud providers, and AI developers, Nvidia is ensuring its hardware and software become essential components in Europe's AI build-out. The result? Europe's AI capacity is set to grow tenfold by 2026, and Nvidia is at the center of that explosion. Beyond Europe, Nvidia's strength was echoed in Foxconn's blockbuster earnings. As one of Nvidia's key manufacturing partners, Foxconn reported record revenue, powered in large part by AI hardware demand. That's a strong confirmation of just how deep Nvidia's influence runs throughout the global tech supply chain. Even more exciting is Nvidia's expansion into what's being called physical AI, areas like robotics and autonomous vehicles. The company's Drive Full Stack AV platform is already powering the next wave of self-driving technologies, while partnerships with firms like Hexagon and Skilled AI signal Nvidia's ambition to lead the humanoid robotics race. Morgan Stanley projects that market alone could top $5 trillion by 2050. And let's not forget Nvidia's software moat, over 400 acceleration libraries, quantum research platforms like Q2Q and DGX Cloud, all driving recurring revenue streams and deepening the company's long-term relevance. In short, Nvidia isn't just a chip maker, it's the infrastructure layer of the AI age. As nations, corporations, and entire industries race to build AI capabilities, Nvidia looks more and more like the ultimate enabler. And for long-term investors, that's a storyline worth paying attention to. Let's move to the second stock, Taiwan Semiconductor Manufacturing Company Limited, ticker symbol TSM. While headlines often focus on Nvidia or AMD when talking about AI, it's TSMC that makes much of that innovation possible. This company is the unseen force behind the AI revolution, and its strategic position in the semiconductor supply chain gives it unmatched influence over the industry's future. TSMC is the world's leading pure-play foundry, meaning it manufactures chips designed by others, like Apple, Nvidia, AMD, and even Google. As AI demand accelerates, so does the need for cutting-edge chips, and TSMC is the only player in the world capable of mass-producing at such high-end nodes, from 5 nanometers to 3 nanometers, and soon 2 nanometers. This gives the company a durable competitive edge that few can challenge. What makes TSMC especially compelling right now is that despite geopolitical worries and a global macro slowdown, its fundamentals are strengthening. Tariff risks from the US have eased, and global big tech isn't pulling back on capital spending, far from it. Meta, Google, Amazon, and Microsoft have all raised their 2025 and 2026 capex guidance significantly. That spending flows straight into companies like TSMC, whose advanced packaging and foundry services are essential to turning silicon designs into functioning AI hardware. Moreover, we're entering a new era of sovereign AI buildouts, where nations outside of the US and China are rapidly investing in local infrastructure. TSMC is uniquely positioned to benefit as the enabler of these projects. In fact, it's already seeing renewed growth visibility into 2026 and beyond, with management reaffirming a 20% compound annual growth rate in revenue over the next 5 years. Despite this momentum, TSMC still trades at a discount to peers, partly due to geopolitical noise. But in reality, this is a capital-efficient powerhouse with a growing global footprint and clear long-term demand. For investors looking for exposure to the AI infrastructure megatrend beyond the obvious names, TSMC remains one of the smartest and most underappreciated picks on the board. Finally, we turn to Broadcom Inc., ticker symbol AVGO, an AI infrastructure powerhouse that's rapidly becoming one of the most important players in the data center and custom chip ecosystem. While Nvidia grabs headlines for GPUs, Broadcom is quietly dominating in the background with custom AI accelerators and ultra-high performance networking solutions, and its momentum isn't slowing down anytime soon. Over the past year, Broadcom's stock has surged more than 59%, outpacing even Nvidia and AMD. But the real story lies beneath the surface. In its most recent quarter, Broadcom reported $4.4 billion in AI-related revenue, up 46% year-over-year. A staggering 70% growth in AI networking, thanks to next-gen products like the Tomahawk 6 switch, shows that demand isn't just coming from AI training, but also from inference at massive scale. And with hyperscalers building clusters of over 100,000 AI accelerators, Broadcom's position as the digital glue binding those systems together is only getting stronger. Broadcom's total AI addressable market is projected to hit $90 billion by 2027, with 3 hyperscaler clients already locked in and 4 more in the pipeline. That level of visibility is rare and powerful. What sets Broadcom apart is that it's not a one-trick pony. The successful VMware acquisition has diversified its revenue mix, adding high-margin, recurring infrastructure software sales to the equation. In fact, VMware Cloud Foundation subscriptions are already driving 25% year-over-year software growth, softening the cyclicality that plagues traditional semiconductors. On the profitability front, Broadcom is operating like a machine. Free cash flow is soaring, EBITDA margins are expanding, and it just posted a record $6.4 billion in free cash flow last quarter, all while reducing debt and returning billions to shareholders through dividends and buybacks. CEO Hock Tan's disciplined capital allocation and strategic vision are paying off. Broadcom is no longer just a semiconductor company, it's now a diversified AI infrastructure leader, positioned to dominate a rapidly growing $50 billion plus market. With hyperscalers increasingly shifting to custom chips and high-speed networks, Broadcom is perfectly placed to capitalize on the AI wave, not just in 2025, but for the long haul. As the noise around tariffs, elections, and market cycles continues, one thing is clear: the AI revolution isn't slowing down. Nvidia, TSMC, and Broadcom aren't just riding the wave, they're building the backbone of this next era of computing. From powering data centers and robotics to custom accelerators and global AI infrastructure, these companies are laying the tracks for trillion-dollar opportunities. And while short-term volatility may shake out the impatient, the long-term story for these AI titans remains as compelling as ever. If you're serious about understanding where the future is headed, these are the names to watch. Thanks for tuning in, and if you found value in this breakdown, don't forget to like, subscribe, and hit that bell for more deep dives into the stocks shaping our world.